Alright guys, since this has been requested so much, I decided to finally make a video for you guys on my model, specifically how you are able to trade Asia session on gold. It's one of those pairs that basically moves always. Like if you look at it, let me hop down to the lower time frame. Let's go to 30 minute. You can see the sessions up here. Basically, like, is there really a session that it doesn't really move in? Let me move this down. No, it's basically moving all the time, and the reason that is because gold is one of those assets that's like, it's a safe haven asset, which means that when there's some economic news that puts the risk of a currency or the currency at risk, that's when people and banks, they put their money into gold, because gold is one of those assets that's secure. It's a safe haven asset, so you can exchange it for something viable, right? And gold is that asset that you can exchange it for. So no matter when or what kind of currency, like say a country gets overtaken, right? Their currency is overtaken, but you ended up buying up gold, and now you can exchange your gold for a new currency, or you can wait until the value of the currency goes back up before you exchange it again, while gold's value typically soars up. And I'm on the 30-minute time frame, but if I zoom out and go to the 4-hour and show you how it's been acting the last literal 2 or 3 weeks, you can see that it's basically only been moving up. Like there's moments where it goes down, but this is typically sell side into like a higher time frame inefficiency. So weekly fair value gap right here, right? We had this weekly fair value gap. The sell side was just pulling back into this weekly fair value gap we had before going up. So like my bias in gold is pretty much always bullish. I'm always looking for buy side. And that's the thing. Like all I have to really do is go into a session, find the nearest fair value gap, and go long on it when it retraces into the fair value gap. And if there is no nearby fair value gap on the lower time or on the higher time frame, weekly, daily, 4-hour, 1 hour, then you scale down to the lower time frame as long as you're trading during the session and you get your confirmation on the lower time frame, like even 5 minute, you can go long. So that's basically what I'm doing, and I don't necessarily restrict myself to a specific session, right? I start looking for my trades from around Asia session, but that doesn't mean that's when I start trading, or that's the only time that I trade. It's basically depending on when I actually get my model to form. My model for Asia session is typically some sort of a fair value gap that creates an IFEG. So typically before Asia session, if we like really go back in time, I can show you guys that this is something that happens most of the time, where when Asia session starts, we end up getting some sort of 30-minute bearish IFEG, like if we're bullish. So this bearish IFEG, it formed a little later than Asia session, but basically once this forms, the market typically uses it to go through and sweep the high. And even this right here, even though like it looks like it didn't respect it here, like I would be looking for a trade before this actually gets inverted, and I would catch the trade into the high. So this is already like a model for me. This is already something that I can trade. While it wouldn't be a correct to like aim for like say all-time highs again right here, it's still, especially because we were drawing towards the weekly fair value gap right here. But the main thing is that I look for some inefficiency to form that then gets inverted. So this right here, for example, right, we have another bearish fair value gap that forms. So if there's something like this, and this is the 30-minute time frame, I'm always on the 30-minute time frame, and honestly 30-minute time frame is my like, it's the key that makes me profitable. The 30-minute time frame is probably the most respected time frame that I've ever seen in terms of like the session. Once the session starts, if the conditions align, and there's, first of all, we already tapped into the weekly fair value gap, we're running on buy side, and there's a 30-minute fair value gap, I don't think I'd ever lose a trade like that. Other than like poor execution. I either got impatient or I came into the market way too late and I got a bad position. Then I'd probably take a loss. Otherwise, this is like bread and butter. If you see something like this, where, okay, there's a 30-minute fair value gap, Asia session is just around the corner, and price is consolidating, where do you think it's going to go if it's staying around here? If price wants to go up, it's going to invert the fair value gap. And ICT has always taught me, whenever I watched his videos, the thing that he would say most is if you have a bullish narrative and you see something on the lower time frame that would be your confirmation for your trade, enter before it happens. And that's one of the things that also makes a game changer for me, because I see people, they trade like robots a little too much. So if they don't get the IFEG, they don't get a trade. Like they have to wait for it. But one of the things that I do that I learned from ICT is that you can enter before it happens and you're already in profit. You're not taking on the risk. So if I entered right here, I'm already in profit. Then it happens and I can decide whether I want to close my position or hold it later. And most of the time what I do is I'm already in profit. I already secure a good portion of my position and I leave a small partial to keep going, because gold is one of those pairs that runs. So even a small partial that you leave running can end up making just as much as the big position that you close, because you never know when it's going to stop. So in this case, we did dip back below it, but that's besides the point. And I'm sure we also had a 1 hour for rally gap. So let's go into this same moment in price, but on the 1 hour time frame. There you go. And that was what was respected. You can see we had a 1 hour IFEG. Once we inverted this, all these candles were staying below it, but once we inverted it, we came back, tapped into it, and ran on all-time highs again. Like, that's perfect, and that's basically what you're looking for. And if we dive into this move right here is probably during a session as well. Yep, New York session. There might have even been some news right here. This is Tuesday the 15th. So pull up Forex Factory, 15th, Tuesday, there was no news. Tuesday 15th. Okay, no news, but still, it respected the IFEG, perfectly ran towards all-time highs again. And basically when you start looking for that trade, like Asia session comes around, what am I looking for? So we're at all-time highs. Price is non-stop running up. So what was I looking for this week during Asia session? Now, I'm somebody that adapts. I don't limit myself just because I have a specific model that I trade, right? I love my Asia session breaker model, but I know that the market isn't going to repeat the same stuff over and over again. Market switches up, economic conditions switch up. So you also have to be able to adapt to this. And all that I literally looked for on the trade that I took like an account from like, I think it was like $400 or $500 to like $3,000. And then my little brother, I deposited some money into an account for him that he trades, and he took the same trade with me. 30-minute FEG right here, and we tapped into the midpoint of this one, pulled all the way back and closed, and we got into our position somewhere around 3,257. This is when we got in because we saw it start pulling back, and I was like, it's probably gonna pull back and close here. But it literally pulled back so far up and closed bullish right here. So we were already in profit. We just went break even and held our positions. There was basically no limit to like how far we could hold the position, how long. So all I was looking for is like IFEGs. If there was an IFEG, then I would like second guess my position. I'd think about closing it. But most of the time I just held through it. I turned off my phone and just left it. And then my brother would be like texting me, telling me, yo, what's happening? What should we do? We ended up basically closing it like in like a day. We held the trade for like 8 hours, I think, from here. Whenever we got in and it started running up until like late London session, and that's when we closed. Just because there was news in the 16th, Wednesday. So I didn't want to risk it on this news. Like, it's the worst feeling when you hold a trade for a while and then the news in 2 minutes literally runs down. Like, you're holding a trade for literally 4 or 5 hours, you're in profit, you can close the position, but you risk it. You wait for news comes around, and in 2 minutes, boom, your position's taken out that you held for 4 hours. That's a terrible feeling that I never want to experience again. But yeah, you basically adapt. And one of those things on gold is like, if you see a wick like this and it pulls back and closes above the fair value gap, it's typically moving back higher. If there's a fair value gap that it wicks into, you know that we're running on buy side. It's just going to keep going up from these fair value gaps. You just wait for the tap into the fair value gap and you go long. And once you start running up, you can go break even, hold it till your profit target, or close basically whenever you're content. And this is the first time, literally the first time in a while, that we got a bearish leg on the 4 hour time frame. So this right here, let's look at the 4 hour. Look at this. I was honestly like kind of looking for more buy side inside of this leg because we closed inside of a 4 hour fair value gap, and I was looking for buy side, and I did end up catching this position, which I shared on my story, but it pulled back and took me out of the position. I even lost some money on it because I was looking for longs from here, because this was the first bearish candle that we got in a long time, and I was like, yeah, there's no way it's gonna actually melt after a bearish candle like that. But it did end up closing below it, ran all the way back down into a lower fair value gap. So look, if you're paying attention, how much fair value gaps is there really? Look, there's a fair value gap right here, there's the one right here that I just marked out on the 4 hour time frame, right? And you're really like just thinking about it. There's one fair value gap right here. Technically there's one right here as well. It's very tiny, but there's a fair value gap. And you're really thinking about this. how much fair value gaps is there really? And that's why I think it's like literally one of the most powerful concepts, because there isn't much, and it's pretty easy to like predict the market where it's going on the higher time frame if there's a fair value gap below and there's one above. There's two variations of where it's going to go. It's going to go down to the bottom one and then up to the top one, or it's going to run to the top one and then down to the other one. Or in a bullish scenario, it's just going to keep hitting the bottom ones, go higher, create a new one, run into the new one, keep going higher. It's pretty easy. All you really need to know is learn fair value gaps, and then all the other things that comes with time, like psychology, your risk management. But yeah, on gold, a lot of people ask me what my strategy is. I wait for a session, I wait for optimal conditions for a fair value gap to form. I wait for it to pull back into a fair value gap like this, and I go long off of it. It's not really overcomplicated. Like, I keep it simple. Fair value gaps is all that I look for right now with time. Without time, I'm not looking for trades because I don't want to be in consolidation. That's basically it, guys. Right now, there's really not much to think about. In a scenario like this, where you're like, okay, there's a fair value gap right here, I'm expecting if we close above this, create some new fair value gap, then we can keep going long off the new fair value gaps that form. And then like these two bearish candles right here would end up becoming a bullish order block once we take out this high. So that's what I'm looking for with the week ahead. And that's what I have been looking for. I'm not restricting myself to a specific model. I'm not looking for sell side before I go for buy side. I'm basically looking for new fair value gaps that form and then a wick into it that ends up being respected. So I'll catch you guys in this following week. Keep you guys updated on how much I end up making or losing, because I also take losses. And part of the thing is, like, I'm willing to take losses on like moves like this, right? I'm not gonna all of a sudden start selling because I took a loss. I'm gonna keep looking for buys, and I'll be willing to take losses along the way here, because I know once I catch a position that goes long, the long is gonna pay me off so much. Like from here, 3284 to 3324, like that's 400 pips. Even if I took 5 losses with 20 pips, like that's 100 pips. 400 like this. It's worth it to just literally sit out of sells like this. Wait for it to come down. If it goes down, sure, good. It goes down. It takes out your break-even positions. It takes out your position in a loss. All you do is you go along again. You hold it till your profit target. All right, guys. Catch you guys later.